Hey, good morning, everyone. Welcome and thank you for taking the time to join live. I've got the mute button on so that everyone's background noise is muted as best we can. I'm going to jump right into it here and just get started. We may be here less than 20 minutes, but it always seems to go a lot faster than you maybe think it should. Fundamentally, let's go through what we've got going on. The conclusion is there's no major change from last week. We've got no signs of demand rationing. Um, Ethanol margins are still good. You're seeing oil start to rally again. Ethanol or supply hasn't changed, right? We haven't created any new corn. We haven't destroyed any new corn. We haven't created any. We're just still in that same spot where we're tight. We've seen wheat get explosive over the last week, and that's partly because uh, well, we're too tight anyway, and the world is trying to absorb and figure out what to do with Europe or with Russia and Ukraine. But on the other hand, India came out and started talking about rationing wheat, right, and by banning wheat exports. So that sent our markets just sharply higher on Monday. And then they started walking that back, saying, "Oh no, we didn't really mean a total ban. We mean a partial ban." And really, what they're saying is, "Hey, if your people are going to starve to death, we'll export you some wheat." But the amount of wheat that they can export has really been decreased because they've got their own drought situation. So for the first time in a long time, you're seeing drought conditions um, in all the major wheat growing areas, including ours. You know, we have the worst wheat that we've had since the mid '80s, and we have the fewest acres that we've had in a century. So you're seeing this problem replicate itself all over the world, and so that's good, just sending wheat higher. Um, and again, I just don't see anything that's going to stop us or turn us much lower unless we create new supply and grow our way out of the situation that we're in. And we have to have the weather in order to do that. So as far as our crop goes, we're going to get it planted. I don't know if we're going to get North Dakota planted, but we're going to get acres in, and we're going to grow a good crop. There's really no, I don't think there's any reason to think that we're not. But what's a good crop? You know, the USDA has us at 177. They dropped it from 181. 177 is the all-time record yield. And do we have conditions suitable to grow that? I don't know. You know, maybe the right number is somewhere between the mid 170s. Maybe we can even hit a 180. I don't know if the weather turns perfect. So I don't think we're going to go higher because we run out of corn on or because we kill a crop. I think we're going higher just because we're that tight and we're probably undervalued relative to where we want to be. So let's talk basis for a second. Basis on the east, on the rivers, is running about 20 to 30 cents above normal, and then basis to the north is running above normal, and basis in southwest Kansas and into the panhandles is running very hot. We heard as much as 170 over the July traded this week out in western Kansas. So that's not telling us that we've got plenty of supply, and that that's not a huge bearish indication. So fundamentally, we're still looking up. I see no reason why that would change. Okay. Now, as we get into this, I want to cover beans and I want to cover wheat. Then I want to spend the bulk of our time on corn, because I feel like corn is at a really important point. So let's look at soybeans first. That's what I've got up in front of you here on your chart. We've been watching this move very carefully. So I've got a Fibonacci retracement up from the peak that was made in April to the low that was scored on May 9th, okay? So that's a pretty big range, 1733 all the way down to 1575. And you've got your Fibonacci retracements up here, 61.8 to 38.2% would be the sweet spot to sell it if you're looking for a lower move, right? But it gets a little tricky because as we've moved back up, we've also blown back up out of our cloud. we've regained where we were 26 days ago, and we've started to see a cross, and we're very, very close to turning the front edges of these clouds back higher. So so this down move, at the moment, you have to look at it as being just a correction, and then this up move, if you wanted to sell it, you've really got to scratch your head on whether you want to sell this or not. But we don't like this B in the 2 here at all. We've talked about this for several weeks. This indicator goes 5 waves up, 1, 2, 3, 4, 5, and then it goes 3 waves down, A, B, C. So when you got this B here, the next most likely move is down. However, the 5th wave, or the 5, tends to extend itself over and over. And if I go back and show you on the charts, you can see this 5th wave just continuously extends. So you get several of these A's and then B's that scare you, and then it just keeps on extending higher. So what we want to drill into is, what does this move look like on a shorter term chart? Is it expanding up in 3 waves, or is it moving up in 5? So I want to show you that on the 60-minute soybean chart here, okay? It's the exact same chart. This is the low on May 5th. I know it looks a little bit different, but the way we're getting to where we are is very, very important to distinguish between, is this a correction before we fall, or is this the beginning of a new larger move? And what we're looking for is a 5-wave sequence up, and we have that in soybeans. You can see it, 1, 2, 3, 4, 5. And so because we've moved in 5 waves, and because we've blown up out of our daily cloud, because we've blown through the 61.8% retracement, which is this green line right here, we've gone all the way through the resistance zones. At this point, even a small pullback should unfold in 3 waves, and then we move back higher. So I think that this is the beginning of a new impulsive wave in soybeans, and I think leads really bullish. Now, and I think it's even more important to realize that beans don't have anything going for it, right? There's plenty of supply. There's of any of them. The USDA says, hey, this is the crop that's the least tight, and so we should be moving lower in beans, not higher, and we're not. So the bean market's telling us something here that I think is very important, and that any weakness here needs to be bought based on this structure that we've seen moving forward here. Okay, now I want to look at corn. We've got 13 minutes left here. I want to look at corn because I think this is really, really important. And I want to clean this chart up just a little bit, and then we'll add stuff back onto it as we move through. The first thing you should see here is a B, and that's exactly what soybeans are looking at too, right? And the same analogy applies. We want to know how this advance from 780 has unfolded up into here, okay, up into this 810 high. But before we drill into that, I want to go through just some chart basics, okay? At these high elevations and with the volatility that we're seeing, the basics really matter and they're really important. And we don't want to get away from what we know is accurate about charts. So anytime you're looking at a chart, we're looking for uptrends and downtrends. The definition of an uptrend is higher highs and higher lows. So you want to see the market move up, you want to see it move down, and then you want to see it turn again and make a higher high with a lower low, just like you can see through here. We move up, we move down, we move back up, we move back down, and we go back up again. Higher highs, higher lows. That's an uptrending market, right? It's very basic, it's very simple. And the reverse is also true about a downtrending market. You can see this little bitty downtrend right here, right? We have a lower low, we have a lower high, we have a lower low. Tiny little downtrend right there. Very basic, very simple, and that's what we want to be, is simple, simple, simple. So this move up is clearly so far a lower low to here. Everybody with me on that? Very simple. So far, this move down is a higher low than this one. So we have a high, a low that's above the previous low, and we also have a high that's below the previous high. So it's very, very important that we get back up above this very, very quickly. And we do not want to see this low right here at that low is 777. We don't want to see that give way. Now, if you layer the wave count on top of it, the reason that matters is because this would invalidate this being a 5-wave move up. Right now we have 1, 2, 3, 4. We need to see it back up. Or you could even count this as a 1, 2, 1, 2, which would be the week count that we've had for the last several weeks that precedes an absolute explosion higher. I think that's where we're headed, but we need to pay very, very close attention to that 777 low and even more attention to that 768 low, because if those start to fall, then we will have left behind a 3-wave move up with a lower high and then a lower low. And that's exactly what we don't want to see this formation turn into. So corn's at a very important piece or very important inflection point right here, and we need to see it work higher. Now, if it works lower and it does break this, I really don't think that means that we're done with the move. It just opens us up to a larger decline, probably down into the 720 level or the 720 area, but I would certainly expect this $7 area to hold. So that's $1 a bushel. That's why I'm making a kind of a big deal about it, is that we can't rule that out if we start to work lower here and move on down. Now I want to put my cloud back on here because I think this is equally important, okay? Look at where the bottom of the cloud is today. It's down here at the 720 level. As we move sideways, what we want to see if it does break lower is we want to see it chop down into this cloud, find support right down into this area right here. You know, you can look at the cloud and you can look at this chart structure support right back in here, and we want to see it hold. And I would expect that to be bought in a big way if it were to trade down into there in the next couple of weeks. So, but on the other hand, if you look at the short-term structure on corn, it's really not bearish. It's leaning towards this count, and I want to show you that on the 240-minute chart first. So here's your 240. So we've had a nice ABC move down. We've had a 1, 2, and now from this low right here, we've unfolded in 3 waves. I'm going to take us down to 60 minutes now, and this is that little move. We've got a 1, 2. So from a 240-minute standpoint, we've from the 777 low, we're working a 1, 2, and on the 60-minute, drill back down into that, we're working another 1, 2. So that sets up on the daily chart almost equivalent to what wheat was 2 weeks ago, which is 1, 2, 1, 2, and then you're up and out of here. But there's not been any new bullish catalysts in order to drive that market higher. So if the market can find an ability to turn higher and start blowing higher even with no catalyst, then that would be very, very bullish. There's some other things that we're looking at that are equally bullish that I don't want to get into today, but I think we just need to stay focused right here. So if you've got old crop that you're really worried about, and you're uncomfortable taking a risk down into this 777 level or the 765 level, if you're uncomfortable with this risk right in here, then you should sell it. You should sell it, and you should hope we break so you can re-own it cheaper. But I don't want anybody mad at us if we blow up out of here. If you sell it and then we blow up out of here. Either one could happen. They're both viable chart setups, okay? I just want to be very clear about that we're not going to be surprised if we move down here. I'm not recommending that we take any action. I think that the bullish case is strong enough that we need to stay there, and that we and that we let our bias guide us. If we start to break this, we may reevaluate, we may adjust some calls or something else. All right, now let's talk about wheat. So this is that same count that we're talking about in corn, okay? It's just a little bit bigger scale. You got 1, 2, and then we had a 1, 2. We talked about this last week, and boom, we exploded higher. And this is the same kind of move that corn could uncoil into with its setup, okay? And that's certainly what could happen. So we're seeing a lot of hypervolatility in wheat. We're seeing very low volumes. I don't expect that to go anywhere. India, other countries are trying to manipulate the price to their benefit because they've got supply, and they're very, very calculated, and they're very smart. So I don't think they're being emotional. I think they're being intentional. I think that Putin is being very intentional. I think he's very intelligent, and he knows he has a monopoly on wheat, and he knows he controls world wheat prices. I mean, if he opens us up and says, hey, I'm going to let all the food flow, then we're coming back lower on wheat. At the current moment, I don't think we should take any action on wheat. I think we need to let it play out. I think the options are too expensive to buy puts. I think the volatility is increasing, not decreasing. So I think that makes selling calls unattractive. I think that your best course of action is just to let it play out and wait. And if we start to see some sort of weakness, or we see some type of news that makes us want to sell it, then we'll sell it harder, and we'll push ourselves into a little bit heavier hedge position. But I think for today, there's just not a great setup that we could really leverage ourselves into that would make a whole lot of sense. But I do think wheat is working higher. I don't think that this thing's done yet. I think that yesterday was a very bullish day, and we may end up seeing the same type of action today. Now, I guess the last thing that I want to mention is, the Chairman Powell in the Federal Reserve is talking about fighting inflation now, and they're talking about raising interest rates until inflation breaks. Now, what does that mean for grains? I don't think it means that they go straight down just because the federal government says, "Oh, we don't want these prices higher anyway." I think that it can certainly cause some headwinds, but not right away. I really think our focus needs to be on supply, because as long as our supplies are too tight to meet demand, and as long as we're burning bushels like crazy, then we've got to stay underpinned with strength, because eventually we have to either outgrow it or we have to ration it. There's no other alternative to it. And I don't think that has anything to do with inflation. I think that only has to do with supply and demand. So the news might talk about it. I don't think it's even on our radar. I think we're just trading the fact that we are running out of food globally, and the governments are trying to figure out what to do with it. So, okay, that's 18 minutes. I almost went for 20. I think no action is the best action at 7:48 a.m. on May 18th. That's subject to change by 9:30, 10:30, whatever. So stay tuned to us. And please, if you haven't already, get on our Facebook Ag Astra Chat page. This is what it is. It's the Ag Astra Chat. Please join this group so that we can communicate quickly with you. You'll get a notification on your phone, and we will be posting short-term updates, pictures of charts, and things like that as it goes on, as we continue to communicate more and more. We've been looking at the different modalities to communicate, and we really think this Facebook is the best way because it's easily accessible and it's instantaneous, and you guys can ask questions and engage with us on there as well. So we are monitoring it, and if you ask a question on there, we want to know what's on your mind, and we will do everything we can to get it answered quickly. All right, with that, remember there is significant risk trading futures and options, and you should only do so in light of your own financial condition. We hope you guys have a great rest of the week. Call us with questions, and we will talk to you next Wednesday.